Universal ownership refers to holding shares in the entire universe of firms listed on the stock market. The big three asset managers, BlackRock, Vanguard, State Street, hold a sizable but still relatively small stake in all listed corporations.
BlackRock is a 3 to 10% shareholder in all of these companies. This may not sound like a lot, but it's enough that selling all of it at once would likely crash that entire stock, kind of locking them into the whole not selling passive thing.
5% in any individual company is actually very significant because if and when shareholdership is dispersed, 5% makes you, in all likelihood, the single largest shareholder in that company. That's why, for example, in a lot of academic studies, 5% is taken as a threshold for control. There's almost no difference between Vanguard, BlackRock, State Street, and even a bunch of other asset managers in terms of their business model. So then you can start and wonder, okay, so if the big three together hold 25% of the shares in any individual company, then you're definitely above the threshold.
Let's zoom in on Amazon. The big three own 16% of all outstanding Amazon shares. Jeff Bezos only owns 9%.
In theory, universal owners should have an interest in maximizing profits in the long term across the entire economy. And that is not how they operate in practice.
The amount of stock you have determines the number of votes you get. BlackRock is almost always in the top 3, maybe 5 if they're feeling broke. So that is a lot of votes. And let's not forget, it's not BlackRock's money that's invested. It's your dad's pension fund and your insurer's massive pile of savings. It sounds crazy, but when you put your money in a pension fund, you sign away your voting rights to the pension fund manager. And then when the pension fund manager puts all their pension funds under an asset manager's control, they sign away all those votes to the asset manager. Kind of pyramid scheme vibes.